Good morning, everybody. It's June 12th, 2020. We are in the COVID era, and I and my partner, Rick Pretsfelder, thought we would have a brief conversation about our thoughts about the world at large, and specifically the real estate market, and even more specifically, the townhouse real estate market in New York City, which is and continues to be our area of specialty and has been for a number of years. So to that end, just to open it right up, Rick, you're a numbers-oriented guy, a metrics-oriented guy. One of the reasons for the success of our business has been that, but you've taken it a step further in COVID, and you've really sort of taken a look at some of the numbers and some of the statistics and what they mean for the real estate market. And I was hoping, just as an introduction, you could sort of both talk to us a little bit about you and then a little bit about how you've made those numbers work effectively, both for you and for the firm.
Yeah, I mean, I do have a background in finance and an MBA and all that, so I do tend to focus on the numbers as part of the way I do my business and the way we do our business at Garfield. So yes, I work with Sophie Smadbeck, we're on a team together, and we crunched some numbers at the as the pandemic hit to try to get a sense of what to predict, what's going to happen. We looked at some previous crises. Obviously, nothing is apples to apples. This is a new world we live in, unprecedented in our time. But we looked at 9/11. We looked at the Great Recession, just in terms of, for example, what is happening to New York City's population? Are you seeing an exodus? How is that going to impact the market? And what we saw during those most recent crises is that there wasn't really a major shift in the population of any sort of materiality. We looked at the census figures at around 2010, and there hadn't been, as I said, a big change in the population. So, from that perspective, it wasn't overly indicative of what to expect. First of all, there's the pandemic of 1918, and there was no great data back then, but it was interesting to look at that period because what followed the pandemic of 1918 was the Roaring '20s, which was a highly social, highly urban world. So it seemed that humans had short memories after that occurrence in 1918. So it certainly did bounce back. Again, there's no predicting now. We're in a whole new world. Technology has changed things. So no one can predict for certain, but I've been involved in many webinars with financial service companies, talking with investors. And interestingly, there does seem to be this strong desire among many to get back to work. So we're hopeful that will be the case here. People will come back to work. It'll be a new setup for sure. But obviously, there's a vaccine in play, there's therapies in play, and hopefully that will assuage concerns and we will see a more robust New York once again. Just looking at the immediate data, there's the data that immediately precedes the pandemic was extremely strong. I work in the Upper West Side. The numbers were fantastic. Price per square foot, average sales price were all up 20 to 35% through the first couple of months of the year. Even with the pandemic, the sales volume is flat. The dollar sales volume is also way up. So, things were on a very great trajectory at the beginning of the year. And even the total number of transactions, given the fast start, are pretty much on par with 2019 year to date. So we believe that if any residential asset class is going to perform well, as the pandemic moves forward and we move out of it, it's going to be townhouses, just given the privacy of space that and control over one's environment that it affords homeowners.
Rick, I'm just wondering, so when you are speaking with prospective purchasers, or quite frankly, people that you represent. I know you have a fair bit of market share on the Upper West Side, ranging from, I don't know, $4 or $5 million up to 20 or so million dollars. Are there common themes that you get on the sell side? Are there common themes that you get on the buy side?
You know, I did speak with an investment banker the other day, and again, he's also a very quantitative guy, very, very numbers focused. And he had a serious concern just about the general uncertainty. That was his thing. We don't know, so that was a source of pause for him to evaluate the market, see where the data comes out. See where the economy is headed. How quickly will it rebound? Certainly, he believes Wall Street bonuses will be down this year. So there was, again, for him, the theme was uncertainty. Again, that being said, we have had a pretty extensive correction over the past couple of years. Townhouses are still, I think, very good value, both on an overall price basis, price per square foot basis, and monthly cost basis, compared to the torrent of new condo developments that have hit the market in the last several years. So I think if you are an affluent person and you can afford to, even with some uncertainty, there will be a movement towards townhouses. And again, I think it will perform as well as any asset class will in the current environment.
So as a property owner, for any of the numerous people you represent, and of the 65 properties we're currently representing, what's the world going to look like, or what do you imagine the world is going to look like when phase 2 is opened? I know there have been a number of laws, legislation, discussion about what happens next. So are people going to be able to look at real estate?
Yeah. So phase 1 started on Monday, June 8th. Assuming phase 1 goes well, phase 2 will occur on June 22nd. And phase 2 allows real estate showings to start up again. So that has not yet been able to happen, and that has certainly put a crimp on things. So I do think that once things open up, we're going to see more activity. But everything that I've seen so far has been baby steps, right? So we were in total lockdown pretty much March and April. May, people were seeing signs that maybe there'll be some reopenings in June. So I don't foresee the skies parting and all of a sudden a return to our previous existence. It's going to be incremental steps as people get comfortable with things. And also, I think people are going to have to get a little more comfortable with a slower sales process. Banks have been taking longer to process mortgage requests. Buyers do have some leverage, and given the uncertainty in the marketplace, they are requesting more financing contingencies. So I think the whole process will take longer. So that's an answer to your question. If you're an owner, what to expect? And I think baby steps towards activity and a longer sales cycle.
Yeah, I mean, I think, I would agree with that. Certainly, I think that we're in an interesting place in the market, and that everyone says, well, this isn't the beginning of the end. And I personally don't think it is the beginning of the end. We've been in business for, over 40 years. And it seems as though crises, as bad as they are at the time, they do seem to pass. And not in a sort of overly optimistic way, but I think in time, cities will recover, and New York City, being the preeminent city in the world, is absolutely going to recover. It's just a question of time. I guess what Rick and I, and certainly other people in the office, have discussed is more about pricing. Are we going to be able to maintain pricing where it was? Is there going to be a decline in price? And if so, what amount would that be? And I think, nobody knows. The short answer is nobody knows. But I do know this, that the townhouse market and the luxury real estate market will come back. Were I a prognosticator on, the future, I agree with Rick. I mean, and again, it may sound self-serving, but I think if you look at the facts, it's true. A townhouse is certainly going to maintain its value in a way that condominium apartments and co-ops may not. Again, it's intuitive, and I think even post-vaccine, whether that's in 6 months or 12 months, we are going to see a decline in value, more so in apartment living than in townhouse living. So we'll see.
One thing I do believe, though, is if there can be therapies and vaccines that are developed, which seems quite clear that we're on the path to achieving that people do have short memories, and once those are in place, that life in the cities will return to something much more similar to what we knew pre-pandemic.
Yeah, I agree. And I think that, as it relates to human nature, I think that's 100% the fact. And I think whether it's 6 months from now, 8 months from now, a year from now, when a vaccine is formed, I'm with you, Rick. I mean, I may even be more optimistic. I think people have no memories at all. They're going to look back and they're going to go, oh, remember the time. But I don't think it's going to affect people going forward. I think that going forward, once this thing is tamed, people will be out dancing, out partying, out doing business, out buying real estate. In quite frankly, there will probably be pent-up demand, just as there was, after 9/11. Things took off. The market actually went up close to 23% that year after 9/11. And I think that it's just human nature. People want to be around other people, and they want big, expensive property. So it's just very real.
I think you make a great point, Jed. I think that there is a pent-up energy that will be released to go out to dinner, to go see music, to go see shows, to go to see museums, to buy real estate, that people have been repressed. And once people feel safe doing that, yeah, I think you're going to see a surge in appetite for urban life.
So Rick, thanks so much for that. I both appreciate your time and your thoughts on both the real estate market specifically and post-pandemic life. We're going to take this up again in another conversation in the near future. And at that time, I think what we're going to try and do is maybe address somewhat more specific items as it relates to the townhouse market. But we'll see you all soon. Thank you very much. Bye.